All right. Looks like we are live. Give a second for everyone to come in here. Welcome, everybody, to the weekly live investment show with MMT, Micro Moment Trading. We are a panel of coaches and longtime investors, experts in various fields of the market. We like to come on here to talk about different topics weekly. We have our resident head honcho, we call him Joe. And then we have Tim, who is a coach of our Micro Moment Trading program. That's our very quick-paced one. And then next to him also is our resident CIA informant, who we will never fully know the identity of.
I cannot totally see the features of my face, so you can do no facial recognition on me. That's correct.
Yeah, exactly.
That's why we got to keep him in the shade there.
So. Yeah.
Actually, my tan is just really dark tan.
Yeah, I wonder if I can. Oh, it'll mute my mic. But one of the times we should have Joe with his interrogator lamp, and then Mark with his in the shadows CIA. And
where you on April 26th? Okay. No, I don't know.
Yeah. Mark has done seminars all over the world with us, and even when he's on a ship, he sort of steps back in the dark areas.
Yeah.
And if there's any lights that shine specifically on him, we kind of move them. You know, nobody.
Hey, I think that's the way to do. It gives you a full view of the room, and I think
there's a couple of countries I'm not allowed back into, but that's okay.
Right. Right. I guess that's because of your 50 years in the CIA as a CIA spook.
Yep.
Still keep your identity.
Either confirmed or denied. So.
There you go.
You know what would be funny? It's probably all true. He's just hiding in plain sight with us. Anyways, welcome to the show, everyone. This week we're going to be chatting about retirement, early retirement, late retirement, savings plans, and what that looks like in our day and age. Because over this last year, I have a feeling that some things have changed in regards to that. Also, some expectations of how people usually go about these things. Peter says, good morning. Good morning, Peter. How are you? And some expectations about these things that are perpetualized by the industry, right? The retail investing industry wants you to do things a certain way, whether you go and just give your money to a mutual fund or whether you self-invest. So I think it'd be a good topic. If you guys have not seen it, this report comes on the Cow Report. It comes out every Friday for the past 22 years, Joe?
Yeah, 21 and 22, yeah.
21 and 22. Good morning, Pete. How's it going? Pete, were you on MMT today?
He certainly was.
Nice. Nice. I heard it went pretty well, eh?
Yeah. I'll give you those numbers in a second when you let me, so.
Yeah, of course. If you'd like to, how did MMT do? I'm also curious if the market's going to drop off.
It just did great today. Mike. It was just Deshaun. It's been off all week. He'll be back on Monday. So it just Tim and Mark, and they had an equal number of trades. There were only 8 trades, but they were up 39 at final total, 39.4238%. And that makes them for the week as of the end of today's session this morning up 111 some odd percent.
Wow.
Which means we have another day tomorrow. We could be 150 or so, which would beat many of the weeks we've had. So it was really good. And they had one Q return as high as 12%, and then a bunch of 8% and 7%ers and 5% all over the place. And so it was really a good day. So.
Yeah, and Pete did a total this morning of 5.5% return on our whole portfolio, which is kind of funny because we're going to talk about this in a minute. But when you compare that to the
on the whole, that wasn't a trade.
No, that was his whole return for the day off of numerous trades, 5.5%.
Wow.
Yeah, that's huge. That's huge. But when you consider, retirement funds, the industry's telling you between 4 and 5% return a year on a good year, and he blows that out under an hour. It's amazing.
Yeah.
And Peter hasn't been with us that long.
Yep.
Either.
I mean, but let's double set that. I mean, some people I recommend they go do this, right? And try it. But some people just don't get it for some reason. Whatever it is, put you in an index fund, make your 4 or 5% or more, whatever it is. And
I think it really piggybacks well off of, I believe it was last week that we were talking about all of the different trading time frames and how you kind of have to look at what will work best, but also what will work best for you, right? If you need those slower trades that unwind over the course of a week and you need to manage that because of your work schedule, that's great, and then those that have that, half hour in the morning to get on at the market open, the market open on options is a magical place. It's something completely different than you've ever seen on near expiration market open options. But again, that's why we can do some of the things we can do here. So first of all, getting into early retirement, Randy is he's at Joe. Randy won't be able to be here.
Correct. He's sort of semi-professional baseball player, and he texted me yesterday and said that they've been having bad weather there in Atlanta, but it cleared up enough, then he would not be here today. He'd be playing. So
evidently he's mid-game right now. That's excellent.
Yeah, that's right. Yeah.
Perfect. And you know what? He did write it, and he's not here, but I think it's funny because he talks about early retirement, and he himself did it, and now instead of working, he's out playing a baseball game.
Right.
And that's kind of the point, right?
Right.
That's kind of the thing.
Yeah, let me kind of say something about that, and then I'll kind of let the other guys take over, because I was with him the first day. He says that he said he was 52 years old when he learned the technique. I think of the song that goes like this: "I wish I knew what I know now when I was younger." Blah blah blah. Mm-hmm. He first appeared in his very first seminar in Atlanta. I don't know how many years ago, 18, 19 years ago, whatever it was.
I remember it. Yep.
And I did that seminar, and he was there. He came in late. He had on sunglasses. I thought he was a blind guy because he had a cane. And to find out, he wasn't. I really thought that because when he went to lunch, he got in the elevator, and he got back to the seminar late. And Aaron and I were doing that seminar. But he told me then that he was being downsized, or a whole bunch of people in his company. He worked for the same company for all those years, and he retired from that company, and he still owns all their stock. And he said that the management had interviewers come in, financial guys, interview everybody that was in that downsize effort. And he was one of the few that had enough security to retire. That security being stock that he had for all those years. And the company pays good dividends. It's a huge main company. Again, he never liked me to tell his company, so I'm not going to mention, but it's huge. And so because of that stock and because of this technique, he was able to retire and live off those dividends when he learned how much he could make on those stocks from the seminars, which was merely, he never knew about selling covered calls. And when he learned that the stock he owned is like only real estate, and that covered call income is a rent, and that rent that he was going to get was more than enough in great style, which he did. And he's been doing it all these years ever since. So that's the perfect example of the advantage of that. Learning these techniques gives you the ability to retire early, because a lot of those other guys didn't get to retire, and there are some of them probably still working. Right. And so that's kind of what it started off that way, because that's exactly how it started. So,
yeah, absolutely. Yeah, retirement is an interesting thing to talk about also, because I think it changes. So, I mean, retirement itself doesn't change, but the world that we retire from as different generations changes drastically. Before we really got into it, I wanted to ask each of you from your perspectives in your timelines how you think this past year and COVID will affect retirements as well, and the different effects of how much paid time off had to be given out, how much assistance, and how much of those things have happened. What effects do each of you potentially see?
Yeah. Well, I mean, for me, I'm at retirement age, and a lot of my friends and group are at the same age. And what has happened this year is that a lot of them have chosen to retire, have chosen to just go ahead and cash out and get out rather than going back to work. There was a lot of work at home, which worked, but yeah, there was just a wave among my peer group of retirees, many of whom really don't have the money to survive another 30 years, and don't really have a vehicle. And I asked them, what are you going to do, based on the numbers that we know and what you're going to get? And their answer most of the time is, I don't know. I'll have to get another job. But you just retired, why do you, so, and then of course I would talk about our techniques that we have here and introduce them to some of what we say and try to get them interested. But something that I think is going on, and what I'm seeing is there is a huge wave of baby boomers who are about to retire or who are retiring, who do not have enough money saved and cannot support the same lifestyle they've had when they were working. Because realistically, if you can look for a return of 4 or 5% a year on your investments, and that's if it's a good year, right? What if it's not a good year and you lose 4 or 5%? And you've taken off 10 years of your money, what are you going to do? So, we're in that group. And I faced that several years ago when work for me in the broadcast arena was drying up, age-related drying up, and I had to find other ways to make money. And I'm so grateful that I found these techniques to be able to do this.
Yeah.
Anyway.
I think that a good example on our microphone broadcast this morning, you guys were there, and the people, when we're doing that broadcast, the people can sit in notes and what's going on, ask questions, and say how they're doing. It's astronomical returns on all our clients this morning. But there was a lady, and she said she was making good returns today. She says it's been first day. She said my husband's out playing golf, and I'm so glad he's gone. I can explain it that he hadn't been out of the house since March.
Right.
And he can't go back to work for, I don't know, another couple of weeks.
September or something like that.
So he's been doing this, as income, so I thought that was cute. So,
yeah.
Yeah. I mean, a lot of people have been confined with all the COVID stuff going, right? So they've been pushed together, for long extended periods of time when normally that wouldn't happen. Right.
Yeah.
So, and the same thing true is people go back to work. I think Tim may touch on this, but people are going to go back to work now, have to go back to the office. And how many people really want to do that now? They're starting to reassess, especially if they're close to retirement age. Hey, what can I do? Can I really retire now or not? And they're looking at what they have as far as their personal holdings. Stock market's way up. Can I cash out? Can I do something, sell my house because houses are way up? But if you can apply some of that to this technique, even then you can definitely retire. I mean, you can create a stream of income and not have to worry about it.
I think Tim touched on this a while ago about return, and this is common. The mutual fund, on average, amongst all mutual funds out there, the surveys all show they make around 5% a year return. Now, if you call one and say, I want to retire, can I put my money with you? They'll say, yeah, put all your money with us, and we're going to make you 5%. And look, and you're young, so you don't retire for 30 years. In 30 years, you'll have $1 million. And now, number one, that's going to be a lot of money in $1 million years. And secondly, you're not going to get much income at 5% out of $1 million. And and a lot of them don't even make that. CalPERS out there in California lost money last year. But if they make 4 or 5%, I mean, they're died and gone to heaven. So there's not much money out there, and that's why these techniques are so great for everybody. And obviously, the nature of the technique, we have a tremendous number of clients doing that service, as does Randy, that probably will never go back to a regular job. So
I like how he says it in the report. When I was considering early retirement, financial experts told me I should count. And what year did he retire, Joe?
Well, it was I don't remember the year, but it was 18, 19 years. That's how long he's been with us. Yeah.
Ago. Okay.
Yeah.
So close to 2000.
Yeah.
When I was considering early retirement, financial experts told me I should count on earning only 4% yearly return on my investments, and that I should spend no more than 4% of my investments per year in order to make them last for the rest of my life. Based upon that thinking, I wanted to retire early with $50,000 per year of income from my investments. I would need $1.25 million at a minimum of investments. That is a great deal of money. And how many people save that much? I was looking into some recent dividend numbers and just how much stock you would need to own to pull out dividends, specifically to get about $3,000 a month worth of dividends. You're going to have to be sitting about $430,000 in stock and holdings. And again, right, it all depends on your previous position. But if you don't have $500,000 worth of stock, then I mean, and even $3,000, depending on the situation, is that going to be enough for you? And how does that look like for you? So, I don't know. I think it's the first place to start is this 4% a year, because I mean, dividends alone. That's why I think that's why we talk so much about dividends being stocks being like real estate. Is you can let the money sit in the bank and just do nothing or deflate or anything like that. And I think that's maybe what it boils down to is these minor processes, these little paradigm shifts that you view, and how to make it work for you, make the money work for you, because it has to have the time to do that.
Yeah, Micah, there's an alternative to this. We haven't discussed this at all. I kind of regret bringing it up. But if you like he did, you only had 300,000. But if you wait long enough till you're really an old guy, and you only got 5 years left, as you figure, okay, like myself, probably statistically less than 5 years, then you can pull out $60,000 a year because you're not going to need your money after 5 years, right? That's the alternative.
That's true.
Right.
That's true.
The only problem is you don't know how long you're going to live.
That's right.
In worst case, if you outlive your money, then what do you do, right? So
it's like speculation.
Yeah,
but
by then you're so old, you had a great life. You've been pulling $60,000 a year out of this thing, right? And you just go to an old folks home and you're for it.
There you go.
Oh yeah.
Much more aggressive approach to retirement.
That is another thing. We're laughing about this, but 4 years ago we played. My wife and I placed. We didn't. She chose to go into a retirement home and a decent one, not top of the line, but decent one, and it was eating up $50,000 to $60,000 a year in cost for that home, just for the home.
Yeah.
So it only gets more expensive the longer we live.
Right.
And if that's more than a lot of Americans make, how does that? Because it matter of factly is.
Mm-hmm.
It's double what a large portion of people make. What are you going to do?
Right. Well, they look at it and base it on, there's most retirees in a home live 3 to 5 years in, and they'll amortize, their money over that time, and but they end up, getting most of it. And if you outlive that time, what do you do? I mean, it's one of the greatest fears Americans have is outliving your money.
Well, yeah, like I don't feel real good right now.
Uh-oh, there he goes.
That's yeah.
But let's go back to retirement in last year in the markets. When COVID hit, we had a huge dip in the market. What was it? I forget
like in February or March or so. We got down there.
Yeah.
The biggest day I remember was 2,100 point drop.
Yeah.
I think somewhere around there. Yeah.
Right. Huge drop. Retirement funds took huge hits, and it took the rest of the year to to get back to even. So that's a year lost, right?
Yes.
In your money making. Now, the market has done tremendously well, but that doesn't mean that your portfolio is doing well, right?
True.
Because if this all managed, they're only guaranteeing you so much, right? Whether that market is up or down, you're still only getting so much. So, I think what we're getting to here is that you really have to take responsibility for your finances,
Yes.
right? You really have to take responsibility for the kind of income that you're going to have, which relates to the kind of quality that you're going to have in post-retirement. And if most people don't have enough money, they have to do something,
Tim, here's something really important. What you're just saying, exactly, precisely. You got a mutual fund to it, okay? Mutual funds are the best gets 5%, okay? But when the market goes down, you don't have any control over what they're doing, and they typically their returns go down, and they also turn to losing money, like CalPERS out there. So what you're saying is exactly right. Even if you're not doing it, people that you hire as professional experts, it's going to happen to them too.
Right.
So.
Right. And I think one of the smartest moves we did, my wife retired from Equifax 3 years ago. She took a lump sum payout from it. And at that time, we were getting into, managing our own money. Well, we're writing covered calls in her 401k. And just keep re-renting and re-renting that money. And it has extended her retirement account. She's making 3 times as much now on her returns, just for re-renting and re-renting Apple stock. So it's almost like, why wouldn't you do this?
Right. And there's people that are just, like I say before, we talked about, they don't get it. They don't want to get it. Like I said, they're not trying to take that responsibility, I think, for their retirement or their financial situation. They're going to let somebody else do it. That's unfortunate, right? Because there are alternatives and things that we have been doing here, covered calls, micro-moment trading, even the technique that Randy does with dividends, captured some of more premium off of those stocks by still earning dividends on them. Mm-hmm. There's a number of techniques that are available to us. So.
Yeah, well, those returns that Randy makes people here today, he always tells us what they're astronomical on a weekly basis, and that's certainly not as intense as the micro moment is, where you got everything within so many seconds. And it's just it would just be so great if everybody was at least exposed to those techniques, at least exposed that they could make up their mind. But they sit back and they don't think anything like that's possible.
Yeah,
so
right. And why do people think it's not possible? Why do people have such disbelief around our returns, right? Are we just trained all our lives to expect small returns?
Yeah,
that's what the industry would like for you to think. That's
what the brokers tell you.
Mm-hmm.
Well, and also, Tim, think about like systematically how much money is made on saving money.
Mm-hmm.
Like saving money, I think. I don't mean to get too socioeconomic or opinion based on here, but I think saving money is an industry that has gotten so disgusting because I mean take that into even like sales and like the institution of Black Friday, like the way the extent of like the saving money mindset.
Mm-hmm.
Yeah.
I don't know.
And even if you go to just think the banks today are paying maybe 1% of your checking account if you're lucky,
Yeah.
And they're lending out and making a lot more.
Yeah, so they can sit the bank and depreciate, and everything, the price of everything can double, and you can't keep up with any of it. It keeps.
I used to own 3 banks, and tell you the worst experience of my life for about 10 years, and but we made tons of money on those people's deposits. We'd lend them to the government. We'd lend them to each other. We'd do all kinds of stuff. That we were making a hell of a lot of money as banks. I always wonder why banks got 150-foot high buildings, and blah 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 blah, and they're paying you right now 1%, maybe.
Yeah. Maybe. So what would that have looked like if people didn't save their money but instead kept it and used it?
Well, but most people can't do that.
Yeah.
Because they don't know how to use it. They probably have a pretty good deal making right now 1%.
Yeah.
So who knows?
Yeah. No, absolutely. Wow, Spy's on an absolute rampage right
Whoa.
now.
Holy smokes. Yeah, all three are wow.
Yeah, vertical. Yeah.
Wow.
Sorry,
Mark,
back.
Mark, are you trading?
Here.
Yeah, I was. I cut that down leg on the Qs there for a little bit ago.
Yeah.
Nice.
Now it's coming back up and almost retraced completely.
Yeah.
Yeah, Spy's doubled the
Mark's
upside.
screen is dark. You can't see his eyes. Tim, he's like you see he's visibly putting up what he's doing. Yeah.
Yeah, I did I caught that down leg as well, and caught 8 cents on a put there,
Yeah.
but I haven't been paying attention. I didn't see that. Wow, just going crazy.
The retrace just happened really quick too.
Yeah, nice.
There's one really key thing I want to mention before. I kind of want to go into the idea that an inch here is a mile there. And when talking about retirement, especially, I think that's huge, because if the number goes from 4% to 5%, that's a 25% difference, right? That's a large difference, and then a 25% difference that's compounded over years, hopefully, right? So I think also when we talk about this, 4% seems like a small number, but if it is, then 6% is a much bigger number. The amount you actually have to do to make an extra 1% a year, like it may seem like a lot of work and everything, but if it's a process that you can learn and apply it over the next 10 years and it only adds 1% annually, then I think that is, worth talking about. What do you think about how you guys have seen your things play out over a few years?
I think 1% is conservative. So if you really pay attention, educate yourself, practice the technique, you can do better than that for sure. So even at 1%, that does make a difference, right? Everybody's retirement, it would make a huge difference in some cases, right?
Mm-hmm.
So it's really worth it.
Yeah, no, that's right. I mean, that's looking at it in different terms, but that 1 or 2% can be the absolute difference between, living a comfortable post-retirement life or struggling and working at Walmart. And there's no problem about working. If you want to work at Walmart, that's absolutely cool. That's not my idea of what I want to do in post-retirement, but you're right. Learning a simple technique where you can generate 1 to 2%, just a month would be huge.
Yeah.
Just absolutely huge. That's a game changer.
Yeah.
Well, just remember, because in the old days, right, before there was internet, I think Pete mentioned something about that. There wasn't always internet. We couldn't always do some of the stuff we do today.
Mm-hmm.
And also, you had bonds. Bonds were paying what, one time 8%. They were there.
Yeah, I've seen bonds over 10%.
Yeah,
Wow.
So people put their money in bonds and just sit back and earn interest, and they're happy, right?
Mm-hmm.
Yeah.
So
those are the
scenario
days.
has changed quite a bit now.
Yeah. Hey, Mike, you see what Eleanor says there?
Yeah, I brought that up for a second. Didn't have internet.
Yeah.
Yeah, and that's true. I mean, these techniques are dependent on having access to instant information from the internet. That has been the game changer for us.
Yeah.
That makes these techniques even possible. So that's a huge point, Eleanor.
I have a comment from Pete here. Melissa and I have been clients for well over a decade. Unfortunately, until COVID forced me not to travel 200 plus days a year, I didn't take advantage of all we learned. Yeah,
Nice.
It's hard to keep it all going. And then in the midst of last year, too, you had quite a few things to think about.
I remember when Pete started doing stuff, and I think that their daughter also is trading the techniques now too. Also.
Mm-hmm. Yeah, and I believe they're responsible for several other subscribers of the service. So we appreciate everything, Pete.
Yeah.
I mean, he says, good point here is to do what you want when you want, right?
Yeah.
And so having this technique or learning something that can help you enhance this retirement bucket of money you have, so to speak, a really great thing.
Yeah, good point.
Yeah, and I think that is, the main conversation. I'm obviously the farthest from retirement, but I think that's a large part of these considerations is what you want that to look like, right? That's a consideration for me even now, is knowing the little things that I can do and to really make a big difference on the road. Again,
And when you retire, you can't just sit around and retire. That's like your kiss of death, right? So it's good to have something to do anyway. Why not generate income?
Yeah,
that's totally fair.
Absolutely. What is it? There's a statistic that I forget how many, the percentage, but a lot of men pass away within 5 years once they retire. When they've taken
raised to work, I remember a gentleman worked there. They said 40 years, retired, went home that evening, died the next day.
Yeah.
Never got to enjoy it, right? So
Well, when you've been working a job 8 hours a day, you get up every morning, you go there, and that's your entire life, and all of a sudden, you quit. Sort of like you can't have sex anymore. Right?
Mm-hmm. Be very disappointing,
Same thing.
Yeah.
It's
a good point.
And I don't know. I don't think people should be, man, it just keeps going. Sorry, we're up like a couple bucks now on SPY.
Yeah, we've done a retrace. It's been pretty good.
Yeah.
Green bars.
Wow. And NASDAQ was down at 130 plus. Now it's only down 57. So there's this huge movement that's happening in the markets. But
yeah, do we know anything about what it's due to, or
I don't think any one particular thing that I know of? But
let's see here.
The market has its own mind sometimes, so it's hard to say.
Yeah.
Yeah.
Peter's got another good comment there too, Micah.
Oh,
yeah, we saw that.
Jobless claims reported.
Yes.
That's what it probably is. Okay, and obviously it was very, very strong, very strong jobs report. So,
yes, and then he mentions Randy mentions the process on May 15th. Titled dividend investing. Yes, as far as our techniques go on this, I think dividends is really an approachable place to look at from retirement. First of all, the process is pretty simple, and there's not much coaching required or anything like that. But what it institutes is using your account like a house, like real estate. You already get the basic income from the dividend, but if you own the stock and you're getting the dividend, then why not employ options? Mm-hmm. Especially like legacy stocks, things that you've owned for a long time. Mm-hmm. Why not have it pay you rent as well? You still own the house if it's sitting there empty, right? And that's cool because you can say, look at my house, but the house still costs money if it's sitting there empty. And I think money costs money if it's sitting there unused. I think that's the baseline concept we're trying to drill down to.
Those techniques that Randy do on the dividends is absolutely incredible. When you have it in legacy stock you've had forever, and you don't want to, do anything where you might lose it. There is no risk in his techniques. You get probably 2 to 3 times what your dividend is, and there's no risk of you losing your stock whatsoever. It's impossible. So
that's right. That's right. It says it is the safest thing out there, and it's kind of amazing that more people are not taking advantage of this simple thing of writing calls and collecting rent on stock that you own. Yeah.
Well, I think, how did you say that earlier, Mark? You can't know. Who said that? You can't know how it works because.
Well, some people just will never get it, right? They won't be able to, understand. Maybe they just don't have the wherewithal to get out there and do it, or the motivation, right?
Well, I think any lack of motivation, though, I would have to disagree with that, because I think any lack of motivation is due to being like bogged down because of how the money works of it. I think it is kind of a discouraging thing to have to work 8 hours a day in the same place for 40 years in the first place. And I think that's, I don't know.
It's pretty mind-blowing.
I think if you showed some people, they would be motivated, right? But there's people that don't even know, right? They have no clue.
Yeah.
So.
Right.
Hindsight of a decade of not doing with the fast cash loss. Yeah. Legacy stocks. Totally fair.
Yeah.
Yeah, true. Peace company, really good, yeah.
Yeah. Pete, I had the same reaction when we learned how simple it was to just, write a call, rent out our legacy stocks. And first thought that hit me was, why hadn't we been doing this the last 20 years? Well, we just simply didn't know, right? We didn't know it existed. We were actually pretty ignorant about investing and how money works in general. Because the professionals in the business tell us, don't worry about it. We'll take care of your money. You don't really have to know.
Taught nothing in high school about it.
Yeah.
Tim, here's what's important. You say 20 years ago. This didn't exist 20 years ago. When we started doing this, that's just when they came up with trading platforms where you could. Just when I left Merrill Lynch, you discovered that you could get these quotes. And that's when compound stock earnings made all these techniques, and Mark was there. Mark was there, and that's when all this stuff started. So you couldn't have been into it more than 20 years ago, 22 or 23 years ago, because it didn't exist.
It wasn't there.
You had to call a broker, and my dad did that stuff, but he had to call his broker at Merrill Lynch and go down there and tell him what to buy, and he'd sell, and then he wouldn't hear from him for a month until the third Friday. So so you didn't miss anything. It didn't exist, and that's why we're such a groundbreaking. That's why most people don't believe it.
Yep. You're right.
Well, it's also 1 in 4 people don't even know what their interest rate is on their mortgage. They have no idea. So it says a lot about how they're paying attention to their finances.
Yeah. Joe, could you briefly explain what weekly fast cash is? I imagine that'd be kind of confusing for
what. Say it again, please.
He talked about not doing the weekly fast cash. Could you briefly explain what weekly fast cash is?
Oh yeah. The weekly fast cash sessions, we do them Monday through Friday. We're only not doing them when it's national holidays and the market is closed. And Mark and Deshaun, Tim.
No, sorry, the Jay's fast cash.
Oh, Jay's fast cash. Yeah. Jay's fast cash is essentially the income arrived from selling calls on stocks. Jay's fast cash, and it's pretty much that's sort of what we call the technique. Off and on, but
we're doing more on a weekly basis too, right? Far out.
Yeah. You should go far out, yeah.
Because of the increase of
well, the reason we call it Jay's fast cash is because the technique sort of formed around a guy named Jay, and he was a senior guy with Apple, and he was the office right next door to who was alive then. What's his name? And he did seminars for me every day for an hour, and he's doing them in his office at Apple. And the guy was brilliant. In fact, he was so brilliant. One time we had a huge seminar down in the Hilton Hotel here in Fort Worth. There were about 300 or 400 people there, and he was the main speaker. And he came, he had on his blue jeans and his black T-shirt and tennis shoes. And he got up there, and he was so freaking smart, I couldn't understand a word he said. He talked for 2 hours, but he was really, really, really good. And then finally he retired. And but he was the J of Jay's Fast Cash. The reason we called it Jay's Fast Cash, and this gets to what you just asked me. Jay's Fast Cash is he didn't have any patience. So he would do the technique like we're at the top. Remember the top and bottom of the chart with the V's and inverted V? Well, he would, whichever side he was going up or down, he could, once he got down there and formed a V, and he bought back when he had sold way up here at the top, he bought it back for a big profit. He couldn't wait for it to go back up again. I mean, he didn't have the patience. He said, guys, he's got to go all the way back up there and then do an inverted V and start all over. And that's what Jay's Fast Cash ultimately solved that problem. He had no patience. So,
yeah. It can be a good thing and a bad thing. Absolutely.
Yeah.
One more from Pete here. Sadly, we knew about it, but I thought I needed to be more available. That's fair. Apple is a great example of how you can quadruple or more the annual dividend, which is kind of small. Yeah, some of the main companies that people consider dividend stocks are lower on dividends themselves. That can be definitely in place for sure.
He alludes to a comment here too, because you're working a lot of times, and you don't think, well, I don't have time to do this. I can't take the time to do this. Can you not afford to take the time to do this? But if you could take one of these techniques, and like you said, increase your savings or your retirement by 1%. I mean, what a difference,
Yeah.
Well, Pete has
that's outside of even our techniques. Like that's what you should do for yourself. I mean, of course, you teach, but
Pete has an advantage. He can do it in his office when he's seeing patients because he's an eye doctor. So they always put that thing over, can you see anything? You say, no, I can't see anything. He's over there on his computer. Doing deals like Tim. He'll do a deal real quick in the FastCast thing, and then so okay, can you see now? Yeah.
I put the chart there. Have him read it. Can you read that chart? Okay, what's that number say? Okay, great. Yeah, very good.
Is that number? Is that yellow line going up or going down?
Yeah.
It's still pushing.
It is.
That's going back way up. It's going back to the top now. It's going to go back to the open almost.
I just broke 417. That's almost $3.
If you say low at 137 on NASDAQ, it's back to 11, minus 12.
I wish sometime one of Pete's customers would say, he's sitting there, he's got his eyes, and Pete's out there. Pete just, trying to be like a smart ass and says, you see the inverted V? The guy says, oh, yeah. And he says, it's going down now. Yes, you ought to be making money, Pete.
Yeah. Awesome.
Oh, goodness.
All righty, guys. Well, I really appreciate all of the input today. We do have an event coming up on the 15th. That is the dividend investing. We mentioned that today. You can find that on our website at Micro Moment Trading. Pete says good vibes. Likewise, Pete, appreciate you talking today. It was great to get some input and go back and forth from somebody that's in a relevant spot to what we're talking about. I really appreciate you being here.
We have a master's class coming up 16th, 18th, I think. It's been firmed up, a master's class in July.
Yeah.
It's going to be here in Fort Worth, and Dirk is working on getting a hotel and all that. So he's going to be putting out an email on that today or tomorrow. And so we're really interested to know people that, might want to attend so we can make sure that we give you first notice. And Mike is going to be there. We're going to bring him down he'll be funny looking because he's coming down from Seattle. And Tim and Mark will all be there. And it's going to be kind of unusual because we're actually going to start the seminar off and do the seminar. And we're
You're going to start.
Huh?
You broke up a little bit. You're going to start what?
Well, it's the first time we've ever done one of those seminars.
Started off with
2 people on Saturday, 2 people on Sunday. We should have our cocktail party on Friday nights, and we have a big formal dinner. But we pay for it. But it's the first time that we, Micah, me, Tim, Mark, that have actually conducted the seminar versus having clients do it.
Mm-hmm. Yeah. Nice. Yeah, it'd be fun.
Yeah.
Yeah, I can't
meet everybody in person for change, and swap stories and.
Yeah, it's gonna be great. So do let us know if you if you plan to attend. Just kind of help us figure out what we need to do. So if you are interested, please drop any of us a line and let us know.
Yeah, because questions of the techniques can go to support@micromomenttrading.com as the email. Yeah. What's up, Joe?
No, I was just going to say, Dirk's the process of trying to book the hotel and, all that stuff. Yeah. So it'd be good if we do.
Finalizing.
Yeah. If we need enough for 100 people or 1,000 people,
Yeah. Right. But this will be great. It's been a long time since we've been able to do a live event, and this will be great. So,
yeah, it's weird to think about given everything we've already been through. It's weird to think about going to a live event given everything that's happened since the last one.
Well, yeah. And Mike was his very first meet. Everybody was on the cruise we had.
Yeah. Oh, I mean the last one that I even did with Micro Moment back in what? I don't even remember. Yeah.
So, that was the first one. That was the first one for the
2019, wasn't it? That was October of 2019.
It was in and we were 25 people because it was the very first time we did. You guys had to do your charts and all that kind of stuff. And Pete's wife was there. Melissa was there. And so it was good.
Yeah. Yeah.
Mary herself by sneezing and blowing out the door.
Yep. Not in the back pose. Okay.
Yeah. Marion's always at those seminars. So.
Yeah, I miss Marion.
Yeah.
All righty. Well, thank you everyone for being here. I really appreciate it. Again, the Cow Report comes out every Friday.
Mhm.
Yep.
So tomorrow, the next week topic will come out on that Cow Report. You can sign up for it at micromomenttrading.com, as well as we have I believe we still run the trial for Micromoment.
The free trial.
Is that true, Joe?
2
Yeah.
week
Yeah,
free
so
trial. You go to the website, and Micah's got it right there on the website.
Yep. Absolutely. All righty, guys. Well, we will see you next week. Thank you for being here.
Okay.
And or see you at the dividend as well.
Yeah.
Dividend workshop. Awesome. Thanks, guys.
See you
Thanks,
later.
everyone. Have a great day.
Bye-bye.
Bye-bye.